banking reform was on your agenda. You had always, I think, had a bee in your bonnet about a lack of competition in the Australian banking system.
They were deadbeats.
Does this go all the way back to what your father used to tell you about the failure of banks to support businesses like his?
Yeah, I think that's where I first got the taste of it. The uncompetitiveness, the oligopoly of the so-called free enterprise banks. So I always believed in competition, but we could never engender any competition. And this is where finally, I mean, in 1977, this is 6 years before I became Treasurer, 6 years, and 6 years before Bob became leader, I make a speech in the House of Representatives saying we should open Australia up to foreign bank competition. And the reason I made that speech in those days was because the free enterprise banks, so-called, the same four we have today, now much different now, were completely uncompetitive.
Can you remember the first real conversation you had with a banker after you became Treasurer?
I do. It was a fellow called Sir Robert Law Smith, who was chairman of the National Australia Bank, and his managing director was a fellow called Jack Burke. And they came to see me in the Treasurer's office in the old Parliament House. It must have been about April of '83. And Sir Robert Law Smith had a sort of plum in his mouth, and he said, "Because, Treasurer, we believe in competition." I said, "You know what, Sir Robert, I'm going to give you some." Oh, he said, "Oh, you are? How?" I said, "Well, I'm going to give you more freedom to take deposits." "That sounds good." I said, "But I'm going to let in a great array of foreign banks to compete for them." Oh. That was my first discussion with them. Of course, that went round the banking industry like wildfire.
Of course, banking reform was an important part of the Campbell report that John Howard had commissioned and was about to implement in the dying days of the Fraser government. And ironically, in your first days as Shadow Treasurer, you opposed him. Why?
He made a change in respect of Commonwealth bonds and bond sales, which were part of the Campbell recommendations. That was John Howard's first change. But he could get nothing else past Fraser. And I'm not sure to what extent he tried, but basically, when I walked into the Treasurer's office, the first day there was a Campbell report on the shelf, and it had faded in the Western Sun from because the Treasurer, that part of the back of the Treasurer's office faced west. And I said to Barry Hughes, who walked in with me, "This tells you something. The Campbell report cover had faded." You know, it was a sort of metaphor for the fact that the Fraser-Howard regime had let the Campbell recommendations lapse.
But nonetheless, whatever banking changes he had announced that he was going to make, you, as Shadow Treasurer, opposed at that stage.
I certainly give Howard the credit for articulating a view that the government was inclined to open the banking system to foreign banks, right? The Labor Party had the head in the sand view, which we shouldn't. In the 3-week or 4-week campaign, there's no way I'm getting the Shadow Cabinet back together to turn over the foreign bank policy, you know.
So in other words, you're saying you opposed it because you were stuck with it?
I was stuck with it, and then what I didn't oppose, I just put a statement out there. But a month after getting the job, I'm telling Ross Gittins and the Herald we're about to have foreign banks.
If, as you say now, you had always supported financial deregulation and knew the float would potentially open the floodgates to other financial market reforms, why did you bother setting up your own expert group to review the Fraser government's inquiry into the financial system, the Campbell report? Why not just plunge in?
Oh, well, the Campbell report, see, the problem is the Campbell report had died, Kerry. I mean, there's this sort of orthodoxy around now which suits Howard and the Liberals and others to say, oh, we set up Campbell and there was an inevitability about these changes. There was no inevitability. The Campbell report had died a sort of a quick death. And so therefore, to come back to it, and by the way, I might add that only Bob Hawke and I supported the Campbell recommendations during the caucus discussions of Campbell when Ralph Willis was Shadow Treasurer some years earlier, in 1980.
But in fairness to John Howard, it was the Fraser government, not the John Howard government.
No.
John Howard was Treasurer and he was pushing a number of significant recommendations from the Campbell report,
Yeah,
and he was basically knocked back by Malcolm Fraser and the cabinet. And just going into that election campaign, he had already floated that he was going to go
all
for
right,
foreign
but
banks.
let's go back to the key point. If you have a core document which is talking about the opening of the financial markets, which then must portend a floating exchange rate, you get it through. It's never been good enough for Howard to say, oh, I couldn't get it past that nasty Doug Anthony, or I couldn't get it past Peter Nixon, or I couldn't get it past Malcolm Fraser. Look, I had to get it through. A Labor government, a Labor Party had only believed in regulation, you know. I mean, it was no excuse. The fact is the Campbell report was dead meat. And I'd said to Stone I was going to set up this Martin committee, which I first announced to Ross Gittins 4 weeks in a Herald interview, 4 weeks after I become Treasurer, to freshen up the Campbell recommendation.
What were the obstacles to the banking reforms within the Labor Party, caucus, cabinet and the unions?
Well, they all wanted to keep... A lot of members of Parliament were members of their own local permanent building society and credit unions. And they didn't want to give this money back to the banks. But I said, you can't have an economy which is capital adequate without the banking system, with the banking system finding they're only controlling 46 or 47% of the credit. You know, do you believe in the prudentially managed institutions? You tell me you believe in a reserve bank. And they said, oh yeah, we all believe in that. I said, you believe in the prudentially managed institutions, the big four, being supervised by the Reserve Bank? Yes. You know, adequate capital ratios? Yes. Career structures? Yes. But you don't believe they should have any money. Is that what you're telling me? You want these itsy-bitsy credit unions to go on and permanent building societies, but you want to hold the banks back. I said, this is an untenable situation.
In other words, that there were two sets of standards.
Yeah.
Prudential standards, one for the banks and another for all the other financial
institutions. Yeah, and because of the way the regulations have grown up, all the smart people, cash management trusts and credit unions and permanents, had all worked their way around the regulation. So the banks were sitting with a declining share of credit. I mean, how can you build a country with that?
So I'm just interested in this as a part of the process of reform when you know that significant elements in your own party are stacked against you. And as I say, the trade union movement and so on. So that was a systematic process?
Yeah. I used to start with the caucus committees, and almost everyone in the caucus would come to the economic committee, almost everyone. It'd be up to 100% attendance. And I'd wait till 2 days or 2.5 days running through the arguments, and in the end, the last 6 would go and get the 3 o'clock plane to Melbourne or Sydney, and I knew I had the thing in the bag, right? So I would always run through the arguments each time, you know, and I said, look, what I'll do, I'll put my arm around those permanents and I'll turn them into banks. So what St George Bank I created from the credit union, which is
the St George Building Society.
The Bank of Melbourne, which now belongs to Westpac, I created from the Melbourne Permanent
Building
Society. So I said, look, I'll put my arm around the credit unions, but we must have a mature structure. Banks must be at the centre of it, but they have to be competitive, and they're slothful and uncompetitive, and that's where the foreigners will sharpen them up.
Looking at the way powerful interests, whether driven by self-interest or genuine concerns, can align against big reforms with potentially big impacts, is there some formula, really? Is there a formula for changing minds, for winning opponents over, for bringing people along?
Well, the formula is what I said to you earlier. You make the political strategy around good policy rather than the political strategy around trickery and imagery. So, in the end, I think a conscientious community knows if they can go to a bank and borrow for a house or an apartment and get the money and be able to afford it, they'll give the government of the day a tick. This was not true, for instance, before 1984-5 and 1986 when I deregulated housing. So, if you have the framework right, and the framework was the internationalisation of the economy and a financial system that got blood to the muscle of the economy rather than a sclerotic one, as we'd had before, then a conscientious community will give a government a tick for that. Yeah.
When you look at the banking sector today, what do you see, apart from the big four banks making incredible record profits and becoming ever more dominant? Where is the competition today?
Well, the competition died in the crisis in 07-08. I mean, I would not have allowed the Commonwealth Bank to buy Bank West. I wouldn't have allowed Westpac to buy St George Bank. I wouldn't have allowed it any more than I allowed them in my day to buy each other. So the four pillars policy I put into place to stop them cannibalising each other. And had they done the cannibalisation, we would have had a lot of the problems that the American financial system had. We avoided that because the four pillars policy saved us fundamentally, saved us from their silly behaviour trying to get big quickly. I mean, what happens when companies try and get big quickly by taking over indigestible meals? You end up with problems. So competition in banking essentially took a big back step when St George Bank went, Bank West went, and the mortgage lenders went, Aussie Home Loans, RAMS and others. You see,
So to some extent at least, you're saying that your concept of competition in the banks has been derailed.
Has been to a large measure derailed. See, when I began, Kerry, the banks had a 3 percentage point margin on a housing loan, 300 basis points. Before the crisis in 07-08, that was reduced to 76 basis points, 75. So from 300 to 75.
This is on top of the official rate.
On top of the official rate. In other words, their margin was 3/4 of a percentage point instead of 3 percentage points. This was all in the mortgagee's pocket, in the ordinary householder's pocket. And now, of course, they've expanded that margin.
You also began your drive on a privatisation program.
Yeah.
Another sacred cow for Labor. State and Commonwealth banks sold, state and government-owned airlines, Qantas and TAA. Looking at the tough headwinds Qantas now flies into, less and less in control of its own destiny, looking at the power and the dominance of the four big banks with the Commonwealth that the people once owned, now the biggest commercial bank of all, making massive profits. Again, no regrets about any of that?
Oh, no, it was all completely correct. Qantas would have disappeared as an airline.
Why?
It didn't have domestic flying and it had no capital. The only capital it would get would be the bit I would give them in budgets, but that was mostly a guarantee of their leasing for their aircraft. So this was a company without capital, without domestic flying. It just would have vanished. You know, vanished under Singapore Airlines, vanished under a whole gaggle of foreign carriers. Its great chance was I merged Qantas with Australian Airlines.
And that was in order to sell them, wasn't it?
That was to make it into a viable international carrier with a domestic base. And without that,
and an attractive option.
Yeah, and if you have a look at Qantas today, without the domestic carriage around Sydney, Melbourne, Brisbane, Perth, if Qantas was relying today on its international carriage, it'd be gone again as a company.
Now this might be a simplistic proposition in your terms, but I hear not irregularly the comment from people who are dissatisfied with the way the banking system works today, in this sense that the whole market is dominated by four big banks that often seem to move in very similar patterns.
It's true.
What would have happened if the Commonwealth Bank was still a public entity that might operate as a genuine contrast and competitor to the commercial banks?
Well, it was, for a start, it was a plane flying on one wing. And that wing was the old State Savings Bank customer base of New South Wales. The CBA, when I found it, was basically a one-trick pony which had a big customer base in New South Wales and nothing in Victoria. That's point one. It was no real competitor in business funding. It had a reasonable book in housing finance, but nothing in business funding. And I bought the State Bank of Victoria, and so the Commonwealth Bank, for the first time in its history, flies on two wings, a big deposit base in Victoria and New South Wales. And remember this, Kerry, we floated it at $5.60 a share. It's now $74. That's how much extra value has been pumped into this thing. $5.60 compared to $74. In other words, it would have been a poor, lonely, government-owned post office bank sitting on the edge, a pimple on the backside of progress, sitting on the edge of the economy.
Surely it was also within your purview over time, very clever man like you with all of the programs that you developed, to have worked out a way to have made that Commonwealth Bank a strong national competitor, but publicly owned.
Yeah, but publicly capitalised. And if we're cutting payments to people and middle class welfare and corporate welfare in one budget after another, the idea of using scarce government capital to capitalise a bank, of all things, a bank where we didn't need to be, was an anathema to us. And I mean, I think we can make this boast. We have created, if not the most valuable bank in the world, certainly the most valuable bank by stock market prices in the world, right? Its utility to the Australian community, the Commonwealth Bank's utility and service now to the Australian community is 100 times bigger than it was when it was a government-owned bank. In the land of scarce capital, we should not be capitalising banks, which are just another competitor to Westpac and see the others. There's just no point in doing that, right? And of course, we created a fantastic thing. I mean, I know there's lots of CEOs and people will take a bow for the Commonwealth Bank, but the fundamental decisions to create the current Commonwealth Bank I took. I mean, I did the investment banking. I was the investment banker on the Commonwealth Bank, State Bank deal and the building of the Commonwealth Bank.
I was about to say, where is the humble Paul Keating here?
Well, there's nothing there to be humble about. It's one of the most valuable bank in the world by stock market, and I've got my label glued all over it.